Hello, and welcome to another update video about silver. Had a little bit of a rally last few days, but really nothing changed on this chart. Let's zoom out first. Take a look at the bigger picture here on the silver chart. I'm still counting this move of the September 22 lows as either a 1-2 setup, which could result in a third wave rally, or depending on how low we go, all of this is a wave 1 and this is a wave 2 with a third wave to come. Okay, so I'm still tracking bullish scenarios below $21.17. However, I need to change it from a 1-2 setup to a larger 1-2, and it could go down lower. It's just based on the retracements, but for now we haven't got a low in place anyway, most likely. Okay, but that's why we're tracking the microstructure. Nevertheless, the yellow area is the opportunity zone out of which we generally expect the price to reverse. It worked a few times now. It's fantastic. So here, and here. Yeah. So all of these reactions here to the golden ratio, fantastic. I mean, that's what you need technical analysis for. So the boxes are typically the opportunity zones where reward is high and risk is quite low. Okay, so this is the area where we expect reactions. We had another reaction. Let's zoom in and take a look. Overall, what would be great is from here somewhere that a third wave to the upside occurs and develops, but I cannot confirm a low in place. It is a strange structure. In this wave 2 that we're tracking, I'm watching for this to be either an A wave, a B wave complete, and the C wave still unfolding. Could get to around about $21.17, or A wave, and then the B wave might still unfold as a triangle. That's also possible, so nothing changed, yeah, and then come down a little lower. It would take a break above a certain level to really confirm a breakout from here. This unusual structure really looks like a triangle that could be unfolding here in a B wave before we come down in the C of wave 2. But let's zoom in. First of all, what did we talk about in the last video? In the last video, we talked about that one more low here in this structure. So after that, basically, after this high, which I'm currently counting as a B wave top, with one more C wave down to come in 5 waves, yeah, we did highlight that one more low seems likely, because I could count a 1, a 2, a 3, a 4, and one more low to come in a wave 5. At least likely, right? So far, we had on this chart here 2, basically, you could say short trade areas. One was here. This spike worked out. I will hide that now. We don't need it anymore. And this resistance area so far also, yeah, price reacted to it, maxed it out, but reacted to it, and it's coming down. Someone said in the comment or argued in the comments about disappointment of the rally because the last wave down never happened. Well, I can only say 2 things. Well, first of all, the yellow area is generally the opportunity zone. So this is the area where you expect the reaction. The reaction happened. The resistance was never broken, so that the scenario was never invalidated. So basically kind of expect a rally in resistance into resistance. So from that point of view, the scenario so far worked out perfectly, and we even reacted to resistance, yeah, which is great. So now ideally I would like to see a break below $22.27 next, but let's see if it works out. However, whereas I would say if the price now breaks above today's high of $23.60, yeah, then I would say we do not get this one more low, and it might turn into a triangle, or we get the more direct breakout. You need to distinguish here between the larger scenario, which is a 1-2 setup, which is bullish, and the messiness of the microstructures, which tell you which levels to watch on the smaller time frames, but basically they are less reliable, they are more fragile, right? That's the case with microstructures. What we use Fib levels for, or what we use the wave counts for primarily, is to identify the Fib levels, and this one has done such a good job, this box. Now, what else to mention? Oh yeah, and by the way, if the analysis says maybe one more low, you know, this is where analysis differs from trading tactics, okay? So, for example, from a tactical point of view, I would, if the conditions are all right. I would typically start to buy sort of before we get the last low, right? So starting to scale in, especially if we enter a support area, because sometimes this last low just doesn't happen, right? That's just trading. That's just reality. You basically trade where reward is high and risk is low. Whereas from an analysis point of view, I always have to go with the highest probability path. So that's where analysis and trading differs. A lot of people don't understand that, but that's important. Think about it. It's very important. You can, the chart says one thing, but for your portfolio, taking a different stance might actually be the right thing to do, okay? For example, the chart could project higher, whereas it might make sense from a portfolio point of view. For your portfolio, for whatever reason, it might make sense to go short, for example, right? So this is where they differ. But yeah, this is interesting now. First of all, we need to be watching this $23.60 level. Yeah, this 50% retracement in the last high. And if a break above that occurs, then I would be watching this trend line next up here. It's not very well here. So we've got 3 touch points. That's something to watch. And if we get a break above that level, yeah, then I think we're bullish, more directly a breakout. Whereas again, then we talk about analysis and trading, how it differs, where, for example, from a trading point of view, I would buy here in the pullback zone. But from an analysis point of view, I cannot confirm a breakout until it happens up here. But that's not where I would buy, right? Unless you're a breakout trader. Okay, that's my update about silver. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.